Hey guys, what's going on? First video of the year. Anyways, let's look at Peter Schiff's video from a few weeks back, December 17, 2014. He says, Yellen bluffs future rate hikes and traders pretend to believe her. So the consensus on Wall Street is that many individuals believe that the Federal Reserve is going to raise the short-term interest rate, the Fed funds rate, to 25 basis points, around that range. Peter Schiff does not agree whatsoever. The alternative media does not agree whatsoever. Now, me thinking about this without looking at any of the data, I don't think that they're going to raise rates. But once again, I could be wrong, and I want to look at more information before I can conclude, hey, are they going to raise rates? Are they not going to raise rates? Or we're going to have to wait 3, 4, 5, 6 months from now to see how the data is like, and then I could have a better decision. And now let's look at the FOMC members. I'm over at chandlerasset.com, and it goes over the 2015 FOMC members, right? And then 2 of them will be appointed by Obama and confirmed by the Senate. So those are most likely going to be doves. Anyways, we could look at the list. I read comments to see who's a dove and what their comments were. And I could conclude that Charlie Evans is going to vote against any rate hike as long as, number one, you have a sluggish employment situation, also what he considers to be low inflation. We all know that the numbers are doctored, but anyways, doesn't matter. So Charlie Evans, he's a dove for sure. Now, if you want to look at all these other individuals, like Janet Yellen, Dudley, Stanley Fischer, if you want to look at Dennis Lockhart, John Williams, these tend to be on the dove / moderate dove side. And if you want to look at someone like Stanley Fischer, he said that, hey, I expect to see higher interest rates. Same thing as Dudley, and same thing as Dennis Lockhart. And they said that, yeah, we expect to see higher interest rates, but if inflation is too low, guess what? We're going to reverse the course. We're not going to raise rates. That's what they said. They didn't say it explicitly, but you could see from what they were saying. It was implied that they're not going to raise rates. They're going to kick the can down the road. So I already have 3 individuals. So you have one dove for sure. You have Dudley Fischer. You have Lockhart. And you could put Janet Yellen in that category. So if the inflation numbers are too low, maybe 0 to 1% because of the falling oil prices, then those individuals would be dovish. Individuals like Brainerd really don't see your comments whatsoever. If you look at Lacker, Lacker is going to most likely vote for higher interest rates, so he's a hawk. John Williams, he said it doesn't matter about these low interest rates. I mean the low inflation rate, the doctored inflation rate. Doesn't matter. He's most likely going to vote to raise the rates. Now, these 2 individuals, Powell and Turillo, haven't had too much information from the comments lately, and then 2 other individuals. So, if you look at what's going to end up happening, I would say that if oil prices continue to stay low, the dollar continues to strengthen, which I do believe the dollar will continue to strengthen. I do feel that a pullback is coming up, right, where the euro starts to appreciate against the dollar, putting downward pressure on the dollar in the interim. So initially you could see that, but then later on in the year, I do believe that, hey, they will see a stronger dollar and they're going to kick the can to another date to raise rates. Okay, so if you want to look at what happened in the markets this year, my opinion is that it had nothing to deal with fundamentals. Again, it had to deal more with liquidity coming from the dollar-yen chart. I don't have to repeat it over and over again, but long story short, the weaker you see the yen, the higher the market's been going. And that's the only source of liquidity right now, since we don't have quantitative easing. even though you may have the plunge protection team and other various entities rigging the markets. But that being said, you look at it over here, end of December, right? I mean October, right? You had the Halloween situation, right? Everyone thought that, hey, markets would go down because of the ending of quantitative easing, but all of a sudden you saw the markets go up, right? And long story short, you saw this is in blue, the dollar yen. It went from 106-ish, right, all the way to 120-ish, and now it's still close to 120. I think it's like 119.65 at the end of Friday, around that range. Anyways, as this weekend, market went up. Any correction, you saw weakness in the dollar again. It's not that hard. So I think trying to gauge where the market's going, you have to understand the dollar yen. Not every day, but that more times than not. This is what I've noticed. That doesn't mean it's going to happen again in the next year or so. You may see a change in that situation. So, where could Peter Schiff and all the libertarians be wrong? They say that, or the people in the alternative media, people are saying that, hey, guess what? Janet Yellen can't raise rates because if she raised rates, you're going to see all this chaos happen. I mean, I do expect to see chaos and fireworks to happen in 2016 with the new presidential candidate, or potentially a new party in town. But at the end of the day, as screwed up as this sounds, if interest rates do go up, the Fed funds rate, yeah, the knee-jerk reaction may be commodities down, dollar up, and stock market down. But what could end up happening is, who knows, the Japanese may decide to inject more liquidity into the market via their quantitative easing, which weakens the yen further and makes the US stock market go higher. I think that we are on the final legs of the bull market for the United States until maybe 2016, 2017, but that doesn't mean that we have topped out. I mean, I thought we were about to top out early last year, right, with Dow 16,500. But as long as this yen carry trade continues to go higher, right, as long as there are no setbacks in the global economy because of the weird fluctuations going on in the currency markets, even though that will be the last straw for the bull market, it's going to get extended. Maybe the dollar gets way too strong that the other countries cannot handle it due to many reasons, which we could talk about later. So long story short, how can the guys like Schiff be wrong? Well, what could happen is yen weakens, right? As you can see in the blue, the stock market goes higher. Initially, Fed funds rate go up, markets go down, but at the end of the day, this liquidity could come out of nowhere, send markets going higher, with the dollar index going higher as well. Oil prices could correct even more. I am long oil though right now, playing it for a contrary move, just as a disclosure. So all I'm saying is that yes, conventional wisdom tells us that, hey, the FOMC will most likely not raise rates, but at the end of the day, they could doctor their inflation numbers saying that, hey, inflation numbers are hitting our target, and then what they could do after that is they have their buddies in Japan provide all this liquidity with this yen carry trade, saying that, hey, markets could go much higher than where they are right now. So this is something to note because it did happen in the end of October where you started to see weakness in the yen. Equity markets started to go higher. So just wanted to point out what's going on in my mind. I'm not biased towards one direction or the other because we know that central planners are in charge. So I was keeping an open eye. I'm starting to keep a lot of cash on hand, right? Going short, going long, just waiting for opportunities and taking it from there. I expect this year to be a volatile market like I did in a video last year and with my buddies at Wall Street for Main Street. So we shall see what happens. Leave your comments. Let me know what you think is going to happen. Are we going to see Janet Yellen and the gang raise rates? We shall see. Thanks for listening to me, guys. I'll talk to you later. Bye.